At this very moment, an extraordinary event is unfolding beneath the surface of the global financial system, which is vastly more significant than any news story or headline would suggest. While the mainstream media is always busy reporting on daily market noise, inflation rates, or political intrigue, a group of discerning investors is quietly shifting their focus to one particular asset that has consistently proven to be a key player in major financial transformations: gold. This is absolutely not intended to promote fear or sensationalism. Instead, it's about harnessing the power of understanding patterns that consistently recur whenever global economies experience an uneasy period of instability. Over the past several months, gold has displayed a behavior that differs significantly from what most investors initially anticipated. Instead of falling as interest rates persistently remained high, the precious metal has shown resilience, even reaching new highs during instances when riskier assets were struggling. This intriguing pattern at once calls for attention and curiosity. Furthermore, institutions, central banks, and major funds don't typically make spontaneous decisions without behind-the-scenes rationale. They take carefully measured steps, positioning themselves early on, long before the public becomes fully aware of the prevailing situation. Once the gentle ascent of gold takes place, it is usually an indicator that something much bigger is developing beneath the surface of the financial landscape. And today, we're experiencing a confluence of multiple signals: escalating global debt levels, diminishing trust in fiat currencies, and heightened geopolitical uncertainty. None of these peculiar occurrences emerges overnight. Instead, they gradually take shape, gradually building as they evolve at a much faster pace. This is precisely why smart money investors don't always wait for the grand headline, but they actively investigate the subtle indications early on. In this video, we'll delve deeper into the critical nature of gold's performance, clarify why this time is unique compared to previous financial cycles, and speculate on the potential implications this could have on the broader financial system moving forward for all of us. This isn't a frightening narrative. It's a careful, strategic foray into preparing ourselves for the emerging changes ahead. To comprehend the reason why gold has been gaining traction in recent times, we must examine the core principles of the global financial system, that of the United States dollar. For the majority of the last century, the US dollar has maintained its status as the world's preeminent currency, providing investors with the ease, stability, and credibility they needed across the vast expanse of global markets. However, in recent times, that fundamental structure has been undeniably tested. The surge in government debt, the increasing cost of interest, and the broader adoption of global competition have gradually led nations to reevaluate their approach to managing their precious reserves. As a result, central banks located across the globe have been progressively reducing their reliance on the dollar as their primary currency of choice, and instead have been making significant increases in their gold holdings at levels that are unparalleled in recent history. This evolution is not a mere hunch or speculative notion. Instead, it is grounded in credible data that has been gathered and analyzed time and time again. Simultaneously, despite any initial signs of abating inflation, underlying inflation rates seem to be stubbornly defiant. The looming reality of a sticky inflation environment continues to drive real purchasing power towards a decline. This delicate imbalance presents a dire situation where traditional savings and investments lose their value in a relatively short period. Gold, conversely, thrives in these periods because it is immune to government interventions or central bank promises. It exists outside the formal economic system. In contrast, stock markets can fluctuate wildly based on the subjective judgments of investors and market players. Typically, gold tends to move based on the foundation of trust or its eventual breakdown. Presently, the level of confidence in long-term monetary stability is being subjected to even more questions and skepticism globally. This is not to imply that a collapse is imminent, but it does emphasize that smart money is increasingly positioning itself in a defensive manner. When financial institutions acknowledge and hedge the risks associated with uncertainty, gold often becomes their first and most logical choice as a defensive option. One of the most evident indicators of a financial cycle is the behavior exhibited by large institutions when there is no significant supervision or monitoring taking place. While numerous retail investors are constantly chasing headlines, a multitude of intelligent money operates silently, employing strategic tactics and carefully observing early trends. Over the past recent year, a considerable number of central banks have been actively accumulating gold at levels not witnessed in decades, demonstrating a shift from emotional buying to long-term strategic positioning. These influential institutions possess access to rich data, robust projections, and carefully crafted risk models, which most investors typically do not benefit from. These central banks have used this unique information to gradually redirect capital into hard assets, such as gold, which has proven to be a highly effective insurance policy against uncertainty, currency instability, and noticeable geopolitical shifts in recent years. Historically, when governments increase spending in order to combat economic stagnation, the tangible assets typically enjoy a surge in value. We are witnessing the exact same setup at the present time. Simultaneously, the retail investor landscape remains fixated on the delusional short-term market noise, neglecting the bigger picture and trends that are taking place from behind the scenes. This significant gap between the conduct of smart money and the level of awareness held by the general public is where it becomes possible for investors to capitalize on opportunities. By the time mainstream media begins trumpeting positive predictions about gold and related assets, the vast majority of the movement has already been accomplished. The key to successful market participation lies in comprehending the intricate nature of financial cycles and how they intersect with the broader strategic landscape, which can only be achieved through careful analysis and intellectual preparation. As we look ahead, the key question isn't whether markets will change, it's how fast. Economic systems move in cycles, and we are entering a phase where stability is being tested. Interest rates can't stay high forever without damaging growth, yet lowering them risks reigniting inflation. This creates a tightrope that policymakers must walk carefully. In these moments, uncertainty becomes the dominant force in markets. Gold historically performs best during these transitions, not because of panic, but because it represents certainty in an uncertain world. At the same time, silver often follows gold's momentum with even greater volatility, making it attractive for those who understand timing. None of this suggests overnight wealth or guaranteed outcomes. Instead, it points to a structural shift in how capital is being preserved. Investors who recognize this early can position themselves strategically rather than emotionally. The goal is not fear, it's awareness. Markets reward preparation, not panic. What we are witnessing right now is not simply another market fluctuation or short-term correction. It is a deeper shift in how value, trust, and stability are being redefined across the global financial system. History shows that periods like this do not announce themselves loudly at first. They move quietly beneath the surface, while most people remain distracted by short-term noise. But beneath that noise, long-term structural changes are forming. Gold's steady strength is not driven by hype or speculation. It reflects a growing awareness that traditional systems are under pressure. Rising debt levels, persistent inflation, geopolitical tension, and the gradual erosion of purchasing power are all converging at once. When confidence in paper systems weakens, tangible assets begin to matter again, and gold has always stood at the center of that shift. Smart money understands this dynamic. Institutions, central banks, and long-term investors do not wait for confirmation from headlines or social media trends. They position themselves quietly, methodically, and early. This is why gold often begins its strongest. Moves long before the public realizes what's happening. It's not about panic or fear. It's about preparation. The goal is not to predict every market move, but to recognize structural changes before they become obvious. When confidence erodes, capital seeks stability, and historically, gold has played that role better than any other asset. What makes this moment different is the scale of global uncertainty. Economic systems are more interconnected than ever, yet more fragile at the same time. Small disruptions can now ripple across markets at incredible speed. In such an environment, protection becomes just as important as growth. Gold doesn't promise overnight gains, but it offers resilience when other assets struggle. That's why it continues to attract attention from those who think in decades, not days. This channel exists to cut through the noise and focus on what truly matters. No hype, no fear-driven predictions, only clear analysis. historical perspective, and strategic awareness. The goal is not to tell you what to buy or sell, but to help you understand the forces shaping the financial world so you can make informed decisions. As this cycle unfolds, those who remain informed will move with clarity rather than emotion. And when the broader public finally recognizes what's happening, the groundwork will already have been laid. Stay informed, stay aware. And remember, the most important moves are often made long before they become obvious.